The Morning Doji Star chart pattern is a technical analysis pattern that's often used by traders to identify the change in the direction of price movement for an asset. I'm going to show you what it looks like and how we calculate it for the TradeOxy platform. The Morning Doji Star technical analysis chart pattern is a 3-candlestick pattern. It's identified when the following conditions are met. First of all, the first and third candle must be bearish and bullish in nature. Secondly, there needs to be a price gap between the first and the second candlestick, meaning that there's a gap between the close of the first bearish candle and the opening price of the second candle. Third, the middle or second candlestick must look like a doji star, which means that the open and close are very close together and the wicks on either side are pretty much the same size. When these conditions are met, we identify the Morning Doji Star Candlestick pattern. Here's how we calculate it at TradeOxy. First, we calculate the first and third candles to make sure that they are bearish and bullish in nature. Then we look at the second candlestick and make sure that it's a doji star. Now, if you want to learn more about how we calculate the doji star, check out some of our other episodes. Then we look at the gap in price between the close of the first candle and the opening price of the second candle. We make sure that there's a gap between them. When these conditions are met, we say that a Morning Doji Star Candlestick chart pattern has been identified. The theory behind the Morning Doji Star Candlestick chart pattern is that it identifies the change in price pressure for a particular asset. You can see in the first candlestick that we have significant price pressure down, which is why you get that large bearish candle. That's followed by a price indecision where the opening and close are quite similar and there's not a lot of space in terms of the wicks on either side. It indicates that potentially the market feels like the price has reached a particular bottom. And finally, the third candle is bullish in nature, showing that the price pressure has now changed in direction to be upwards. Now, of course, this is just a theory, and normally this candlestick chart pattern gets used with a lot of other different indicators. But there you have it. With TradeOxy, we wanted to build a platform that would allow you to take this candlestick chart pattern and apply it at scale to any of the tens of thousands of different assets that we cover. You can also apply it to multiple different time frames for each asset, which really gives you a lot of flexibility in terms of building that strategy and signing up to our learning. Hopefully it works for you, and don't forget that all trading is at your own risk.